let me now bring on board Nikhil Vora, Managing Director of IDFC Securities. Hi Nikhil, welcome back. How was New Zealand? I've been told that you indulged into bungee jumping there.
Yeah, quite a bit of it, I guess. That was possibly the most interesting thing that's happened in the last couple of months.
Markets also, I can see adventure sports have started. We've suddenly recovered 4% from the Maze low just when nobody expected markets to recover.
Totally. I think markets done enough flip-flop, just pretty much like what the government has been doing in the recent past. I think and we've been saying this over the last 6 odd months. There've been 3 things that what we said has happened, and obviously a lot of things that we said has not happened. But among the 3 key things to look out for was, one is the index holding on that 16,000 range, and that's been pretty much on board over the last few months. Second was we still believe that 2012 will be a year of savage interest rate cuts, and we've seen at least part of that happen already in the first quarter of the current calendar, and possibly some more happening as we get into next week. And third is to look at corporate resilience. While earnings growth has been tepid at around 10% odd, but the fact is that the pain in corporate India, if you look at the financial sector, has still been significantly because of issues with SEBs and airlines rather than issues with SMEs. So I think those 3 issues have been proven pretty much stable. Obviously, on the negative side, you've seen enough harakiri which literally the government has been creating, not because of inaction, not only because of inaction, but more because of flip-flops that one has seen on some government policy moves. So I think that has been slightly more unnerving for most investors. So I think we've been living in extremely volatile times, and this is obviously not going away in a hurry.
Nikhil, so what happens if the Reserve Bank of India cuts the rates by 50 basis points, and what happens if it cuts the rates by 25 bips, which is something that the market seems to have priced in already?
I think I don't know what's really priced in. I think there's 2 things. One is there's been a lot of debate about what happens in the pigs economy and so on. Firstly, personally, I don't think those things really matter too much over a period of time in India. And if India has underperformed by around 10% in the recent past, it's a lot more to do with what's happened in India itself. So I would think that you require solutions to happen domestically rather than look at global stability beyond a point, which is anyway not in your control. Second is to look at interest rate cuts. I think it's more a messaging that needs to go out that the government is serious about inviting and addressing the biggest concern in corporate India, which is get the sentiments back, get investments back. And I think interest rate cut is the direction in that sense. So I'm not going to be so much perturbed about whether by cutting interest rates by 25 bips right now, are you going to get tons of capital for investments? But the idea is that you're sending across a statement that that is the intent of the government, that government sector needs to be the propellant of growth, propellant of investment, because the consumption side is doing perfectly fine. So the private sector theoretically is, or the consumer side, is doing perfectly okay on their own. It's the government which needs to take proactive steps, and an interest rate cut will only go to ensure that you start to speed up investments.
Okay, Nikhil, let's talk stocks. You track United Spirits. Stock is up 6% today. Do you think United Spirits is a good business but a bad environment, and at these levels it makes sense to buy United Spirits?
Normally all socially taboo businesses are great businesses. So I think liquor is a very good business to be in India. I've had issues with United Spirits specifically with regards to the way the business was being run and the longer term focus of the management. I've always been skeptical about United Spirits specifically on the context that they've not really moved premium, and the market in liquor has really gone premium. So if half of industry's economics is being driven by someone like Pernod Ricard, which controls less than 10% of the Indian market, it shows where the value really lies. So I think it's important that United Spirits realizes that that money is only at the top of the market. Second is obviously there is pain within the group, and whenever there is pain within a group, we've learned to realize that entrepreneurs find their way out, and in this case it could be some amount of value unlocks which could happen within the company. Our sense is that United Spirits is sitting on a few value unlock potential, which could be treasury stock of United Brewery, which United Spirits holds. So that could get sold out. So there could be certain trigger points for United Spirits to play out with. So I would think that it's a good trade, but I genuinely want to see change in the way the business operates to feel extremely bullish about the stock for a longer term period.
Nikhil, since you track the space pretty closely, what have you made of the digitalization in the cable space? The deadlines have been extended and there are talks of an extension of 3 to 6 months as well now. What is it that you like out of the space? Where do you see value unlocking as well?
Very frankly, I think, when we are in the midst of such moving pieces across the country, across the world, you don't really find structural stories. And right now, to me, possibly the only structural story in India is digitization in the media space. I'm extremely bullish on the way digitization will move in the country. We've been bullish in the recent past, and I don't see any reason to change the stance. Government deadlines getting extended by 3-4 months, to me, it doesn't really move the needle too much. The important part is that by default, we had built in the fact that digitization will happen by December rather than July, which is the supposedly deadline date. So I think, if you are looking at digitizing 10 million boxes or 10 million homes in a couple of months, it's an extremely impossible task for the operators to do. Can they do it in 3-4 months? I think it surely will happen. Should the consumers first feel the fright of actually seeing the analog signals being switched off? I think if that becomes a reality, you'll see digitization pace move disproportionately faster. I think the pace is already very strong right now. I believe cable guys, for instance, which is MSOs like Den and Hathway, are right now adding literally 3 times more subscribers per month than what they were doing literally 3 months back. So, and they're doing better than what DTH companies are doing right now. So, which is a big statement to make for cable guys. So, I think the good part is that digitization benefits everyone, right from the broadcasters to the government to MSOs to consumers. So, and it makes the entire trade legal, which was not the case till date. So, I'm extremely bullish that this will kick up. You will start to see strong subscriber additions across the board. Cable guys will be the biggest beneficiaries. I obviously like Den and Hathway in that spectrum. And I see huge value creation potential because, you look globally, digital players are the biggest value creators in media. The largest media company in the world is a cable company, which is Comcast. So there is no rationale to believe that India will not be a relevant player in the digital space.
Just a disclosure here, the channel you're watching is owned by India's biggest company, needless to flag that off, Bennett & Coleman. Nikhil, what about a company like Dish TV? Now, digitization is a victory for cable companies, but what about DTH players?
See, firstly, Nikhil, this is a benefit for everyone, anyone in the digital space. The idea is that do we want to now play delta plays within that digital business? And I think the delta plays are a lot more in cable than in DTH. DTH was always an unregulated business, so they don't necessarily get a cleaner slate than what the cable guys are getting right now. So if I had to choose a business between the 3 companies that are listed, I would go with Den, Hathway, and then Dish. But my preference would clearly be the cable guys.
Apart from digitization, are there any structural mid-cap themes or mid-cap businesses you are betting on which to your mind could give a 50% return or even 100% return in next 2 to 3 years?
It's interesting. If you look at the last maybe 2-3 years, you look at the companies or businesses which have expanded balance sheet size and thereby theoretically created supply. So companies which created supply were possibly the biggest underperformers in the last couple of years because They're the guys who created supply, but there was clearly a demand lag. So clearly the performance went pretty bad in recent times. But as we look at it today, my sense is that if demand starts to come back to normalcy, and which might take another 6 months to a year, but as demand comes back, the guys who've created supply are the guys to really play on. So as long as their balance sheets are not totally levered. So I would go with players like in the cap good infra space, maybe players like Jaiprakash, Adani Ports, or an Eicher or a JSPL. I think these are interesting names to bet on, who've created supply, whose balance sheets are relatively strong among the spaces that you are looking at. So one is on the supply creators, and second on mid-cap spaces. I would think it's not so much of value which I would buy. I would buy growth, and wherever there is visible growth is what I would feel more comfortable with. So clearly pharma is one space which one has been comfortable. We continue to remain fairly comfortable there. So players like Ipca, Dr. Reddy's could be interesting guys to look at. We like some of the private sector banks, IndusInd and so on, and obviously the digital players that we've talked about.
Nikhil, what have you made of the recent reports that perhaps there will be a duty slap on diesel cars, if not a diesel price hike, and how badly could it dampen some of the diesel car manufacturers, the likes of an M&M, etc.?
It's always a contra that, on the whole, the market expects diesel to get deregulated. And, on the same side, you will obviously get some impacts in certain spaces and so on. I think the bigger picture has to be a lot more relevant. I would sense that hopefully the government gets some muscle to really push through a diesel deregulation or a price increase. And that in an entirety would be more positive. Obviously, it will hit certain businesses for a duration of time. But my sense is, re-ratings are far more meaningful than looking at short-term earnings impact for certain businesses. So I would be more comfortable if you actually saw diesel price increases happen, which are a lot more contextually relevant.